gold prices having a hard time breaking through that 1750 level and holding it. John, what does that mean, that gold can't break out through that level?
Well, at the moment, it means that much like the rest of the other markets, they're waiting for news from Europe and trying to see, where this whole credit issue is heading. Unfortunately for the bulls, I'm afraid that Europe is showing all the signs that the credit debacle is back, that the credit contraction is on the way, and that a perhaps more deep and prolonged recession is also on the way. We've just seen metrics that show M3 in Europe collapsing, basically a 74 billion euro credit collapse among the banks that appear to be hoarding this money that was thrown their way, and it's not making its way into the firms and personal consumers' hands. So I would certainly want to see some real strong steps out of Europe before I would again take on more risk and then buy more stocks and more gold and so on.
Now that said, it seems like we are expecting European banks to hit the European Central Bank up for almost €1 trillion worth of dollars at the end of the month. What does that do, however, to gold and the money supply?
Well, they're trying to hit them up, and of course, Greece is trying to hit them up for a second bailout package and so on. But apparently, with the banks, as we've seen just now, they appear very content to sit on the money, even if they do receive it. So if it's not finding its way into the economies, then we have a problem. China, on the other hand, is willing to step up and perhaps chip in to try to help the European situation. Obviously, had vested interest in there, 40% of its exports being to Europe. But China itself seems to have a problem. We heard from Gary Schilling this morning he is looking for a quote-unquote hard landing this year in China.
Now, that said, those deflationary worries and slowing growth would obviously be bad for gold. However, it does seem like the European banks are buying sovereign bonds. We've seen the yields go down significantly. And Gary Schilling is definitely in the minority thinking that China will execute a hard landing. It seems like they have a lot in their reserves in order to lower the reserve ratio requirements and also lower interest rates. Now, those, you could argue, could be a good catalyst for gold.
It could be argued that, and of course, if we were to manage to overcome the roughly 1803, 1805 level on a closing basis, I think we could be poised to possibly make new highs. Absent that, we have currently a difficult time surpassing the 1750s, so we'll have to see that.
So then last quick question, if you're looking for a possible breakout of 1803, if the more inflationary scenario plays out, what do you expect on the downside if the deflation scenario you're looking at and slowing growth plays out?
Well, if in fact, again, risk, is taken off the table and the appetite for risk basically ebbs away, we could be looking at a repeat of the scenario we've seen, in December when everybody suddenly turned bearish because we saw numbers up there evaporating. And of course, the lower end of the spectrum, that 1500, 1530, 1480 spectrum developing, on the charts. But we would have to resolutely break under that 1630 first and then the 1580 second.
All right, John, thanks. I really appreciate it. So those are your two inflation-deflation scenarios for gold.